In 2009, our losses on a statutory basis from our core insurance business at the parent company were $257 million. That was driven by all the losses we sustained in our Medigap products and our individual lines of business. In our Medigap line, we had suffered losses of $196 million, and in our other individual lines, it was about $94 million. And so those individual lines, which are subject to state regulation and the broken regulatory system we have in the state, produced essentially all of the losses. And the rest of our business combined was just slightly better than break even for the group insured business. We were very successful in managing our investment portfolio in 2009. We were also successful in 2008 in minimizing the losses on that portfolio. In 2009, our returns on our investment portfolio were in the range of 14%, which were substantially better than industry benchmarks. And the reasons for that have to do with asset allocation that we do within our prescribed guidelines, as well as specific security selection. So we were very successful in managing our investments over the last 12 months. Out of our portfolio, less than 20% of it is actually invested in the stock market and equities. The majority of it is invested in fixed income securities. And as interest rates changed over the course of the year, we were able to take advantage of the changes in those rates and be able to beat our benchmarks in that fixed income market. We would not expect that to continue. Normalized rates of return for our type of portfolio that we would have, a conservatively managed, would probably be expected to be in the range of 6% a year. So probably less than half of what we received in 2009. RBC is risk-based capital, which is prescribed by the National Association of Insurance Commissioners, and it's a way to look at the business and its reserves relative to the amount of risk in the business and look at the solvency of the business. Our risk-based capital has been declining each year for the past 4 straight years, and it is now at 650%. At 650%, our risk-based capital is within the prescribed limits of the Blue Cross Blue Shield Association and well below the state prescribed limits, which are significantly higher.